what we can see is that all the contracts expiring in natural gas um, between Russia and a few spaces in Europe are going to expire. And now we're looking for more alternatives for where we can get liquefied natural gas. It's made a lot of these names go crazy. This one we talked about in the happy hour chat
Yep.
together. Yesterday it was up like 18%, and today it's down 5%. It's very interesting where they're coming in and they're just putting their positions in and leaving. So the chain is sparse. And if we were to come in, we would need to be in those areas. And so a couple of things I really like. The first is an iron condor. It's the 6570 4540 short iron condor. You know, I like to look for at least $1 on a $5 spread or a 20% return. This is giving us a 50% return because the implied volatility is so high. So that is gigantic and quite useful. Now, another thing that we can do on the cheap, and let's see if the chart has come up. Look at this chart. This is a weekly chart.
We call, just FYI, we call Boyle the Widowmaker in the happy hour
absolutely.
because this thing is just crazy.
Having to do with nat gas.
Yeah.
Anything having to do with nat gas. So what we do see happening, though, it is building some kind of base. And my thought was, hey, if it gets to 60, it's going to collapse and head back into that 40, 45-ish area before it runs again. I think this move was under all of that news that came out. I mean, there was an article on Schwab, there was an article in Forbes, there was an article in the Wall Street Journal. It's all over the place. And so this might be a space where we could say, hey, when it gets to about 45, we can position ourselves a magnificent butterfly to the upside. Or we could say, hey, I know all the way until March, we have the opportunity for nat gas to expand. And so we could go down here and say, all right, what does it look like? See, they're still piling into this 40.
Yeah.
What does it look like if we position ourselves with a 1/3/2 on the downside? That would give us 112. Let's see if it might be better to do. Is that March? Yeah. What would June give us? That would be something we'd have to sit on for a while. Still 81 cents, but that's when this will collapse, right? It begins to collapse in the summer months, as we can see from the chart, right? We know that into those summer months, we normally see this collapse of motion, right? It rises into March and then collapses during the late summer. So getting this on the cheap, if we use June or even July, it'll take a while. Oh, they won't let us go any further.
Let me ask you, would this also be something that maybe you can kind of keep on the back burner? And if you see natural gas push up over these next few months, then maybe looking at putting this trade on?
Oh, you mean for the put
into June?
side? Absolutely.
Yeah. So you can kind of keep this on the back burner, and that actually is that's pretty sweet too. Because if you see a move up in natural, this trade is going to be cheaper. The time horizon is still the same.
Exactly.
So okay.
Exactly. Yeah. So you might be able to get this for 50 cents, right, instead of $1.50.
Yeah.
So that's my thought from there.
Cool.
Now, so we have the iron condor. We have, you could do a short spread if you like, but if we're thinking, hey, these guys are going to push this price up in the near term, because of the problems that are going on overall, we could go 60 to 70 to 80, and it would be 50 cents
Okay.
to do it in March. And this one we could take right away because it's going to fade a little bit and then pop back up, particularly if things get a little bit more treacherous, as it were. And that is a really nice upside event for all practical purposes. Notice, as we've looked at it, it's jumped about 40%. So what you'd want to do is put it in the queue at about 60 cents or so to see if you can get it in the space where it looks good.